This is the Coins, Cashflow, and Conversations podcast, hosted by Dakota Grady and sponsored by Upstate Essential Solutions. If you need help with accounting and taxes, you are a nurse practitioner entrepreneur, med spa owner, or esthetician entrepreneur, you need help with the accounting and taxes for your business, contact me today at dakotagrady.com. And if you're struggling financially, let me check the check, and you want a better financial future, contact me today at dakotagrady.com. Resources that help you with your financial journey. Hello, y'all. Thank you for joining me for the podcast. Today, I want to talk to you about new tax law changes I learned about in my continuing education. I want to add value to you so that you'll be aware of the tax law changes that are happening or have happened in the upcoming year. So here we go, y'all. I'm going to dive right into it. So the first thing I talked about was the Employee Retention Credit, ERC. That credit came about because of the pandemic. The IRS wanted to reward employees who kept their employees while the pandemic was happening. And if you did, you were able to get a credit and get a refund for doing that. Well, the IRS is shutting that down because as of September 14th, because of fraudulent claims. They created a new withdrawal process for the ERC. So basically what you have to do is, if you submitted a claim with, say, your Form 941, which is your employer tax return, basically, for employment taxes, and you have to, if you haven't been paid, if it's a legitimate one, you can fax the IRS at 855-738-7609, right? But if you have received a refund but not cashed it, you have to forward it, return it to the IRS refund inquiry unit. All right, y'all. So find out more about that on the IRS website at irs.gov. So it's also talking about the new tax form for 2023, the 1040, which is the individual income tax return. It has a question on there now talking about digital assets. And what is the digital asset? If you want to know, IRS has defined it for us. It's basically any digital representation of value which is recorded on a cryptographically secured distributed ledger or any similar technology as specified by the Secretary. So it could include convertible virtual currency and cryptocurrency, stable coins, non-fungible token, or NFTs. So Bitcoin, Dogecoin, those things right there. And the IRS is basically wanting to create a form for reporting called Form 1099/DA. The DA, I assume, means digital asset. So it's going to be reporting gross sales for 2025 basis in 2026 too. So basically, the IRS wants to track or have you report any digital asset that you bought or sold or exchanged in 2023, because that's income to you. So they want you to report that. But what happens is the brokers are going to have to submit those to you if you had any digital asset activity, and you're going to have to report it to you through that particular form. And you're going to have to report that information from the 1099 DA to the IRS on your tax return. Normally, if it follows the same guideline as a 1099, which is basically information return, if you made $600 or more in your business, if you are, say, a subcontractor or independent contractor, you would get the 1099 from your client because they paid you money for services that you provided. If it's the same thing, you have to report your digital assets that you bought and sold. Any proceeds that you received that were $600 or more, you gotta report that to the IRS. That's simple, y'all. So, also, the next thing to talk about was the Inflation Reduction Act. So, we're on a kick as the U.S. wanting to have clean energy. We have, now the IRS created the Clean Energy Provisions, EV or electrical vehicle credits, home improvement credits, and the home building credits. These are all credits geared toward reducing I guess, emissions. So would it be more friendly to the environment? So the IRS is giving credits for having vehicles and homes that are efficient in terms of energy, saving energy. And one of them is the new clean vehicle credit, or 30D is what it is talking about. Basically, you get a maximum credit of $7,500 and it's non-refundable. That means you can't get a refund if you had a credit more than your liability, in other words. So there are some qualifications and limitations on those, such as original use of the vehicle must be in the US. Your modified adjusted gross income limit, if you're married, it tops out at $300,000, right? And if you're single, it's $150,000, which is half. And you acquire the vehicle after 2022, right? So those are some things that you have to qualify. And also, the vehicle cost, the limitation is if you're married filing joint, is $80,000. If you're single, it's $55,000. So basically, a qualification that you have to follow in order to qualify for this particular credit. Also, you have the used clean vehicle, which is basically 25E, and you can purchase a vehicle of less than $25,000, and 30% of the sales price is up to $4,000. Basically, that's a credit right there. So that begins on if you purchase a vehicle beginning January 2023, and your income, if you're married, filing joint, it can't exceed $150,000, and if you're single, it can't exceed $75,000. All right. So in order to see the qualified vehicles, go to fueleconomy.gov to find out more information about the used vehicle credit. See if you qualify. And you can also get a credit for a business vehicle as well. So let's see. Let me continue with the used vehicle credit. In order to qualify, you must be an individual who bought the vehicle for use and not for resale, not be the original owner, and also it must be purchased from the dealer, and the dealer reports information to the IRS. So there's other qualifications as well, but those are some of the ones that I see here that are listed. And again, you can get a commercial clean vehicle credit, or 45W, and basically it's the lesser of 15% of basis. Basis is what you have invested into the business, including any income you've earned for the business as well. So 15% of basis, or 30% for non-gas diesel powered vehicles, or it is the cost of the vehicle. So whichever is lesser. So the credit is up to $40,000 is unlimited credits. So it's unlimited, right? And it's non-refundable. So that means it can zero out your liability for your business if you have liabilities, or like your liability, your tax liability that is, on your tax return. And you can carry over as general business credit. So if you have more credits, you use all your credits, right, and it zeroes out your credits for zeroes out your liability, right? And you have more credits left over, you can carry over to the next year. That's what the carryover part means right there. So you can also get credit again for your personal vehicle, whether it's new or used, and also get a credit for your business vehicle as well. So some of the qualifications for the commercial vehicle credit, again, you can get more information at irs.gov for qualified manufacturers. It must be used in the business, used in the US, and there's no previous credit allowed. And you must be treated the vehicle as like non-equipment or machinery. Again, and then the basis is reduced by the credit. So the credit, if you got a basis of say $1,000 in your business, credit $500, basically it's gonna reduce basis from $5,000 to $500. There's also energy provisions, the home energy credit as well. So what are the qualified, say, efficient things that you can purchase for your home? Well, You can get exterior doors, windows, skylights, installation materials, central air, water heaters, furnaces, boilers, heat pumps, and you can also get a home energy audit. So you can get that. If you get your home audited, make sure you can get credit for that as well. So if started at the beginning of 2023, you can get 30% or the maximum of $200, right? And some of them up to $2,000, right? So it can be used for your primary residence and your second home and as renters as well. So you don't really have to own your home. You can improve it and also get it as a renter as well. So what are the limits? Well, $400 for each taxpayer per year, plus a $150 energy audit as well. So for residential energy credits for property, say windows, the credit is $600. For exterior doors, it's $250. For heat pumps, water heaters, biomass stoves, and boilers that are placed into service as of January 1st of 2023 is $2,000. So there are credits that you can get for your home if you want it to make it energy efficient, y'all. And there's no lifetime limit on the home energy credits either. So that's awesome. So landlords cannot take the credit if they did not live in the home, right? Renters can take the credit too. So if you plan to buy a home in the future, you can also get a credit for being a renter as well. And you can claim the credit when you install it, not actually when you actually purchase doing it. When you install it, when you get it, so you can claim the credit. And the credit must be for existing homes, not on new homes. Again, you can also get a credit for solar panels, solar water heaters, wind, 30% cost of qualified improvements as well. The only limits are on fuel cells, which are non-refundable but can be cared for unused. So again, the limits are $400 per taxpayer, and $150 for energy audit, $600 for residential energy property for windows, for example, $250 for the exterior doors, and $2,000 for heat pumps, water heaters, biomass stoves, and boilers as well.